Hi, it's Conor Svensson here, founder and CEO of Web3 Labs, and this is your Week in Blockchain on Monday, the 13th of September 2021. The highlights this week include El Salvador adopting Bitcoin as its legal tender, the SEC is threatening to sue Coinbase, the NFL bans crypto advertising and NFT sales, the InterWork Alliance merges with the Global Blockchain Business Council, FTX's NFT platform launches, and Sotheby's has a $24 million NFT auction close. El Salvador this week has now adopted Bitcoin as legal tender. What this means is that the currency needs to be accepted everywhere throughout the nation, including for people paying taxes or buying goods at stores, buying property or land, or whatever else. It's been somewhat mixed, the response globally in terms of this move forward. Of course, people who are big proponents of Bitcoin see it as a huge move forward. However, the International Monetary Fund and other financial organizations do see it as quite a risky thing for the nation to have actually done. And more broadly, many are looking at it as a bit of an experiment as to whether a nation can actually succeed with this. And of course, the downside there is the risk of the Salvadorian people. In terms of the actual, them turning it on though as well, there were some pains with it initially. So first of all, the president, Nayib Bukele, announced that they'd purchased 200 Bitcoin in order to coincide with the actual adopting it as its legal tender, and purchased about 400 Bitcoin for its reserves. And the price of Bitcoin went from over 50,000 and then dropped down 10%. And people have said about the implications in terms of the treasury that El Salvador has as a result of that. But of course, we all know that cryptocurrencies are incredibly volatile, and so this sort of this up and down is to be expected. However, long term though, given the deflationary measures that sort of exist within the Bitcoin protocol, there is of course the potential for it to be a more sound store of value than some of the other more volatile currencies. Of course, previously though, El Salvador was actually using US dollars as its main currency, so that's right now anyway certainly a lot more stable than Bitcoin in terms of the pricing, but longer term certainly a lot of Bitcoin holders would see it otherwise. What they actually did though was that they released a official Bitcoin wallet, the government there, called the Chivo wallet. The intent there was that people who actually had the wallet would get $30 worth of Bitcoin as well, in order to encourage them to actually start playing with the currency. But then what a number of people did anyway was that they actually took their 30 Bitcoin and converted it back into US dollars in order to get the cash out from banks. So it didn't necessarily have the success that they wanted, and also certain places as well just weren't set up in time in order to accept Bitcoin as a payment, such as some of the supermarket chains as well there. So all being said, it's been relatively smooth, this initial take up, but of course there are going to be teething problems with something like this. And so far though, it's I guess the experiment has started, so to speak there. Off the back of this though as well, we've had other jurisdictions actually start to provide more crypto friendly legislation too. With Panama has created a crypto regulation bill, which basically means that it's supportive of blockchain and crypto assets there as well. And this was partly influenced by what happened in El Salvador. We've also had Ukraine as well say that they're looking to grant crypto-orientated companies and exchanges freedoms to operate in the country there as well. There's been ambiguity over the legality of digital assets in Ukraine for a significant amount of time, and so these other nations starting to think more in terms of embracing crypto. It's quite interesting how it's come off the back of the El Salvador announcements there. Other news: the SEC is threatening to sue Coinbase over their high interest crypto products. So Coinbase has planned to launch a new product called Coinbase Lend, which enables people to earn 4% interest on their USDC stablecoin holdings on the platform. Really, you can see this as a bridge between the DeFi ecosystem being provided by Coinbase. The numbers where using the DeFi ecosystem and some of the other platforms out there, people can actually earn yields as high as 12% for the stablecoin USDC, which is obviously a lot better than what you could get with a bank account. However, with Coinbase creating a product to actually offer this service, it just opens up the ecosystem to a lot more people. And whilst the 4% return is not great by DeFi standards, it's still a lot better than what most bank accounts are offering at the moment. However, the Securities and Exchange Commission, or SEC, has warned that it will sue Coinbase if it moves forward with a plan to offer this product. Coinbase have expressed quite a lot of frustration about this because they're trying to be sort of as transparent as possible and work with the regulators, where they can to get the right support. And they feel that they're getting kind of mixed messages from the SEC on all of this. So their actual CEO, Brian Armstrong, actually lashed out on Twitter for that exact reason. And so it's certainly not a path that the Coinbase, of course, wants to go down. They're generally playing along well with regulators, like we've spoken recently about them working with the Japanese regulator, for instance, to get the relevant blessings they need in Japan. They're obviously very well established in a number of other jurisdictions, including the US and Europe. So it'll be one to watch to see how it plays out. But certainly, it's a good move by Coinbase to be trying to do this, because it opens up the DeFi ecosystem to more everyday folk who are actually using the platform there. Visa have announced that they're planning to provide crypto services to a number of traditional Brazilian banks. What they want to do is provide cryptocurrency services to traditional banking systems in the near future. Apparently, they're working with a number of cryptocurrency businesses in Brazil to create crypto payment cards. There's speculation that they'll be direct integration with Bitcoin payments. So they're looking at doing this as an API-based approach, and some of the firms that they're working with there include Bank, Altabank, and Ripio. So again, great for the market over there in terms of just opening up the opportunity of using crypto for more and more people in the region. The NFL, National Football League in the US, has banned teams from crypto advertisements and NFT sales. They've said that they want to have this ban in place until the NFL League establishes a strategy for sports and digital trading cards and art. So they've actually barred all teams and members from crypto-related sponsorships and adverts. And so compared with some of the other sporting leagues where you're seeing crypto and NFTs and so on really embraced, such as in the National Basketball Association with the Dapper Labs and the Top Shots, we've also had FTX working with the National Baseball Association. They're providing sponsorship too, and also some football clubs too, playing their actual staff in crypto. So it'll be fascinating to see how it pans out. But one would expect that the NFL will be crypto friendly longer term, just because there's the opportunity for a lot of sponsorship funds for them there. In enterprise news, ConsenSys, alongside another number of other firms, have been shortlisted to develop central bank digital currencies for the Monetary Authority of Singapore, which is the central bank over there. The Monetary Authority of Singapore have been very crypto friendly in terms of putting regulations in place back in 2017, and actually started working on a CBDC version of the Singapore dollar using blockchain technology back in 2018. And so there's a number of different companies that have been selected for this, including ConsenSys, but of course it's a great step forward for the regulator there and also the companies that are involved in this. A new study by Research Dive has projected that the IoT market is going to be worth just shy of $6 billion by 2026. Sorry, the blockchain IoT market to be worth that. They believe that there's going to be a compound annual growth rate of 91.5% from 2018, which is when the market was actually valued at 32 million. The thing that's driving this is that there's a lot of acknowledgement that IoT devices and blockchain can help improve a lot of the supply chain efficiency and remove a number of the intermediaries there as well. So it's great to see these sorts of numbers coming out to actually see where people really believe the market is actually going there. Certainly from our own experience, we know that a lot of telecoms companies and so on are embracing blockchain for IoT initiatives, and so it certainly seems feasible anyway that we're going to see a lot more growth in this over the coming years. Mastercard, they've acquired the crypto analytics firm CipherTrace. So CipherTrace is basically it's a crypto tracking firm. And what they do is they focus on anti-money laundering, forensics, and blockchain threat intelligence scenarios. And so Mastercard have acquired them in order to actually bring their offer to Mastercard's businesses to help them identify and understand risks and support them in their asset regulatory and compliance obligations. Also, in terms of blockchain, the world's blockchain standards, there's been another big announcement this week with the InterWork Alliance merging with the Global Blockchain Business Council. So the InterWork Alliance launched just over 12 months ago, being driven by the token taxonomy framework, which came out of the Enterprise Ethereum Alliance. And the intent here is to provide a framework for organizations to adopt tokenized assets and create business-focused standards for this rather than technical-focused standards. However, as many people have recognized, that there's a number of different standards and industry organizations here. And so it was natural for these two different organizations to come together to provide greater reach for what the InterWork Alliance was doing, but also provide some technical specification foundations for the Global Blockchain Business Council. So this industry organization now has, I think it's over 350 members, so it's a great step forward. And some analytics that have been published this week, apparently there's now $1 billion locked up in Ethereum Layer 2 scaling solutions. The actual different protocols that are making use of these, the top of the list you have the DYDX protocol, which has $285 million locked. And then there's a number of different types of rollups, which is the scaling technology that's used for this, including Optimistic, Plasma, Validium, and ZK, which are actually, with ZK rollups, making up just over 500 million of that. Polygon, the layer 2 scaling platform, has integrated the Mina protocol into their platform. And so this is to actually provide a privacy on the Polygon platform. But what's fascinating about Mina protocol is that it's a very lightweight smart contracts platform, and is actually being pitched as the world's smallest blockchain. And to actually contextualize this, apparently their blockchain is just a few kilobytes in size versus the over 300 gigabytes that the Ethereum network is as well. So the intent here is that it will make it more accessible. People can use much lower power devices such as, say, a smartphone to actually run a full node on the Mina network. The reason for this apparently is because it's making heavy use of zero knowledge proofs. In effect, with zero knowledge proofs, you use them to store proofs that some inputs actually that you have visibility of create a certain result rather than the underlying data there as well. Certainly, if it succeeds with scaling significantly on top of this layer 2 network, one does wonder how much we will see it grow. But again, it's great to see actual privacy technology going onto Polygon. A project called Eden, which is a priority transaction network for Ethereum, has raised 17.4 million in a token sale. And so this is to protect against something called minor extractable value and arbitrary transaction reordering. What's so important here is this, within the public blockchain networks, this idea of minor extractable value is that you have your different miners and so on the network, and certain transactions, people find ways to arbitrage them, so they can basically front run them so they get executed before other transactions take place in order to make a profit. So an example, for instance, if you're using a decentralized exchange and you have a big position that you're looking to do a swap of on Uniswap, you can have someone who actually sees you send that transaction into the Ethereum network, but then someone figures out, well, if they actually send in a transaction where they're willing to pay a greater amount to actually see it executed, they can actually get their transaction to happen sooner and actually potentially make a profit off that trade there. And so it's a fascinating technology, and it's great to see an actual company or protocol coming out there to address this very real problem that happens with the network. And it's kind of reflected by who the investors were here as well, which include Jump Capital, Alameda Research, Wintermute, and these are all the companies that are quite closely associated with trading, and in some cases like Jump Capital and Wintermute high frequency trading as well. So it's again like a fun one to see there. Cardano, it's launching their smart contracts on their public test nets today at the time of recording, which is Sunday. And so this is going to be this much anticipated upgrade that a number of people have been waiting for, and it's going to make it publicly available as well. And so this upgrade's called Alonzo, and this technology has been in development for years, so it'll be a big milestone for them, and also we'll see what the reaction is by developers over the coming weeks. In the DeFi news, we've seen Wanchain and Avalanche work together to create a decentralized cross-chain interoperability. So what they've done is the Avalanche have integrated Wanchain's cross-chain infrastructure with Avalanche's C-chain, and they're looking to develop truly decentralized cross-chain applications to help power DeFi. Seeing these two companies coming together is certainly positive news. With Wanchain have been working on interoperability for a number of years as well. They're well established, and of course Avalanche too being another one of the up-and-coming public blockchain networks that we're seeing there. Chain Analysis, they've published a report looking at DeFi that's basically said that during Q2 of this year, 2021, that institutional investors have actually dominated the DeFi scene. They haven't actually released this report publicly, but what they saw was large institutional transactions, which are those above $10 million USD, accounted for over 60% of DeFi transactions in Q2, compared with under 50% for all cryptocurrency ones. So it's quite fascinating to see this, because of course we know DeFi is very popular, but the fact that the transaction size is so great that people are really throwing around very significant amounts of money here. When you're looking at the public Ethereum network, given how expensive gas is to actually execute on top of it, one could argue that it makes sense for the transaction value to be pretty significant for transaction fees that run into the hundreds of dollars to be for investors to be willing to absorb them. But at the same time, it's not like it's a very straightforward ecosystem for people to engage with. There are tools that certainly make it simpler, but the fact that so much of this is coming from institutional is something of a surprise. So again, fascinating stat to be released there. The DeFi hub Acala has raised just over $60 million before their smart contract launch. And so we've spoken about the Acala platform before. They're based on Polkadot. They actually raised this from over 26,000 community members worldwide. The intent, though, is that these funds, although they're with the Acala's foundation right now, they will go to a DAO, or decentralized autonomous organization, to manage it, to become self-sustainable. This is something that we see happening with most projects. The Acala ecosystem, though, is key for helping build up the DeFi ecosystem on Polkadot, because they provide like a smart contract language there as well. So again, it's a big milestone for them to be moving forward, and especially with that amount of funding, they'll be able to achieve a lot. On this notion of funding, Algorand have also announced that they've got a $300 million fund now to attract people who actually want to build out DeFi on top of the Algorand ecosystem. And these will be paid in Algorand tokens. But again, almost every week we're talking about another protocol that's released a developer fund there. So there's so much money floating around for teams that have ideas to build on top of these platforms. In the world of NFTs, the OpenSea platform, which is where we're seeing the majority of NFT transactions taking place, they traded $3.4 billion in August, according to a report. The actual sales in July were 325 million. So it's a huge amount of growth, and this is typically, previously anyway, the digital assets that were being traded there were mainly sports, digital art, or in-game assets. But now a lot of the transactions are coming from avatar-like NFTs who are hoping to emulate CryptoPunks and generative art that's created by algorithms, and then loot as well. FTX, they've launched their NFT minting platform. The actual founder of FTX Exchange, Sam Bankman-Fried, he sold his test NFT for a whopping $270,000. So that happened this week, and the NFTs on the platform will be built cross-chain on Solana and Ethereum, according to Bankman. At this point in time, the withdrawals of these will actually open up in a couple of weeks, but deposits are available. And this is in part to take on OpenSea and Rarible, who are the leading platforms for selling and exchanging NFTs. And given how widely used the FTX exchange is, they're definitely one to watch in this space to see how they go. However, there was actually an interesting quirk that happened too, in that initially they allowed people to create the NFTs on the platform for free, and people decided to start spamming the marketplace with fish NFTs, and so they actually had to add a charge to people who wanted to create NFTs on the platform, which was $500, because of this spamming of pictures of fish on the actual exchange there. On the platform there. They've now reduced these fees down to $10, and everyone who actually had to pay the $500 will be refunded. But it's an interesting twist in the tale there. So there's been some fun trends that have been coming out with crypto gaming as well, where basically some projects recently have actually started creating characters or NFT assets and so on that could potentially be used in games, and just releasing them to the wild without actually a game or any environment for actually using them built yet. And so this is something that is somewhat experimental and has been referred by one person as Dungeons and Degens. These are the words of Dom Hoffman, who announced this project Loot recently, and it was basically where he released randomized adventurer gear, where it was limited to only 6,000 of them, and then people were able to claim this adventurer gear as long as they paid the transaction fees, and they were all snapped up. But the funny thing is that there's not an actual game or a platform to play these with. It's just that here's someone who's released a load of NFTs. They've obviously got reach so that people bought into it, and then people have spent a lot of money then actually trading them in secondary markets as well. And the intent is that people will come along and actually build a game off the back of it in the coming months or years. And so where it goes, who knows? But it's definitely an interesting twist, and Loot has kind of been one of the pioneers for this, and it's really caught on in terms of the monetary value. The cheapest price for any piece of loot is around $50,000, and there was a sale for just shy of $1 million for a single one of these bags. So it is going bonkers out there. We've also seen the N project as well, which is NFTs of random numbers, which is related to this, which has hit a $40 million market cap. Thinking about loot where you actually have some sort of thing that's related to like a role-playing game in there. In this end project, it's literally just numbers, and they've managed to achieve, in just 3 days after launch, the average selling price for an NFT in the collection is over $4,500. So again, maybe somewhat bonkers, but also fascinating to see, because it's people are trying out new things here and seeing where it goes. There's another NFT that was released this week, Lobby Lobsters, which raised more than 4 million in an hour, and this is to support DeFi lobbying efforts. And so these are NFTs with cartoon lobsters in suits, and the intent here is that these NFTs will be used to benefit a non-profit focused on policy issues facing cryptocurrencies. A Russian State Hermitage has raised 440,000 using a Binance NFT auction. So this is a museum over there, which is the largest museum in the world. They've done their first auction on Binance's NFT platform, selling 5 tokenized collectibles depicting masterpieces from artists like Da Vinci and Van Gogh. It's something that was, it was snapped up with people paying in Binance's USD for this, and the highest bid went to one that went for 150,000 Binance USD there. And the intent here is that all the funds will go to the museum. Apparently, no surprises, the global interest in NFTs has soared by 426% in a month. This is coming from the Blockchain Center's analysis of Google trends. And so they're basically looking at Google searches. And so at the beginning of August, the searches for how to buy an NFT was ranked number 19. But by August the 29th, it rose to 100. And so 100 is basically the search interest. And so 100 is as high as it can go. So again, no big surprises. But again, it's just reinforces just how much interest there is in NFTs at the moment. Also this week, there was a bug in OpenSea, which destroyed $100,000 worth of NFTs, including a historical ENS name. This was raised by Nick Johnson, one of the Ethereum name service developer, and he was trying to transfer an ENS name that he had on the account, and it actually went to a burn address. So, fortunately, there weren't too many people affected by it, but again, it talks to the problems that can happen here, because it's not possible to get these things back when they've been burnt on a blockchain. One of the other big pieces of news was Sotheby's Bored Ape Yacht Club NFT auction has actually yielded $24 million. And so this was for a lot of 101 of these Bored Ape Yacht Club NFTs. It's certainly gone ahead of expectations, where Sotheby's thought it was going to be between 15 and 18 million. And this works out to be 240,000 per Bored Ape Yacht Club NFT. So again, just more reinforcing all the mania that's going on. PancakeSwap have announced that they're going to be launching an NFT marketplace and a PancakeSquad NFT collection. PancakeSwap, they're one of the popular DeFi venues on Binance's smart chain, and so it's no big surprises there that they want to jump in on the NFT craze as well. And so again, it'll be another one to watch just because of the reach that the Binance smart chain has, with regards to DeFi, and it's certainly got a lot of traction because of the cheap fees that they offered. But I think what's slightly different now with NFTs is that we're seeing a lot of different venues offering NFTs, whereas when PancakeSwap spun up originally, there wasn't really too many other venues for these DeFi platforms, apart from sort of SushiSwap and Uniswap. So it might be that they're getting slightly late to a crowded market. Who knows? We shall see over the coming weeks here. The Aave founder, Stani Kulichov, he sold an NFT called Yield for just over 1.15 million or 350 ETH to an anonymous bidder. But it's this time again, he's embedded a social experiment into it. So the idea here is that the holder of the NFT has a dilemma there. They've either got to hold on to the NFT to see if, and basically speculate on it and then sell on to someone else, or they're allowed to return it to him by the 31st of October and receive all of their funds back plus 10% of the value of the NFT, or 10 ETH, or whichever is cheaper. So again, just the social experiments that are happening here are fascinating, and with each week that goes by, people seem to be coming up with new stuff. And finally, Solana, they've had their first $1 million NFT sale, and this is for its degenerate ape. This was purchased by a blockchain advisory firm, Moonrock Capital, and they purchased it for 1.1 million. The ape is apparently the 13th rarest in the collection. The Solana in the last few weeks has been getting a lot of popularity just because of the transaction volumes it can handle, and has been sort of moving up the list, as we spoke previously about, in terms of the largest cryptocurrencies by market cap. So again, it's just it's another milestone that they've been able to hit here with this NFT sale. In terms of the metrics, the crypto market cap, we're down 7.4% this week to 2.12 trillion. Assets locked in DeFi is down 11.5% to 87.21 billion. 7-day NFT sales are down 70% to 171 million, with an average price down 18%, just under $6,500. That's all we have for this week. If you like what you hear, please subscribe to our podcast and YouTube channel. Reviews are always well received as well. Links to all items discussed are available in the show notes and on our website, weekinblockchain.com. We've also just launched a new podcast, Blockchain Innovators, where I speak to individuals who've made significant contributions to the blockchain ecosystems. Find out what inspires these innovators, get their thoughts on the latest industry news and events spanning crypto, blockchain, protocols, DeFi, NFTs, DAOs, and IoT. Thanks, and I'll see you next week.